Hey guys, welcome to another video. Welcome to episode 4 of the game plan videos. Now, I know there is a gap between episode 3 and 4, but I wanted to spend the time to set up things like Discord and managing the group and just other things that can support you guys to make sure that I give you guys the best possible content. Now, we've come to the point I've been waiting for literally about 8 months now. The price has finally reached the area that I was looking for, or as I said in our chat today, in our channel, we've got the extended version of scenario 2, which is for the price to take the low of the previous bullish run that we've had. Now that we've got into this situation, we have the trigger that we need for this massive bullish or incoming bullish pressure on the dollar, which I've been expecting for a while. Now, it's been an exciting time. Price has been bouncing up and down a lot, and we've been posting and sharing stuff. But now we've come to an important crossroad, and it's become highly important that we get yourself prepared. I get myself prepared, and we will get ourselves prepared. All right. Well, without wasting any time, let's get started. Okay. So first things first, to put context to why I've been ranting and raving about the dollar index for the last couple of months. I'm sure you guys have seen the content, the analysis that I've been writing. Now, we've had some really good trades as well. Now, to put context to why we're looking at the dollar index so much and why personally I've been tracing down the price like a sniffer dog for the last couple of months is because we are in a very important fundamental narrative. Now, to put context to this, I'm going to reanalyze the dollar index from the beginning so that you understand where I'm coming from. But before I do that, I do want to put some fundamental context to this. Now, every 5 to 10 years, there's always going to be in the world markets, financial markets, what I call an overarching fundamental. I'm sure there's probably other terminologies for it or other ways to describe it. But in essence, in very simple terms, what it means is what is the main theme that the world is experiencing? So during 2020 to 2021, the overarching fundamental was COVID. Within that, there were many other things going on, but the overarching fundamental, which set the tone for how the market's behavior was COVID-19. Okay. Now, what we currently have from late 2022 into 2023 and onwards is the overarching theme is inflation. Okay, now how did we arrive at this cost of living crisis seemingly out of nowhere? Now, one thing is that a previous theme does have links to the next theme, and whatever happens in that time frame affects the new time frame and how things arrive from there. So, for example, during COVID from 2020 into 2021, we had very important price action that happened. And we also had very fundamental shifts that happened in terms of monetary policy and etc. Now, during COVID, okay, a lot of money, a lot of currency was printed. And this is the foundation of how inflation happened. Now, why was a lot of currency printed? Now, currency is a representation of an exchange of value. So if I give you currency for a service, my currency that I'm giving to you represents my value that I'm exchanging for the value you're giving me. That's how currency works, and that's how it should be operating within a normal economic infrastructure. Now, during COVID, because of the nature of what COVID was and COVID-19 and the risk of infection was very, very high, especially March around those times, a lot of industries where their main, the income comes in from close contact to human beings, like, for example, the hospitality industry, was almost just completely shut down, unless somebody was doing it in their house. But in terms of like normal high street businesses who focus on hospitality, the industry was completely almost wiped out. Now, the people who were working in those industries, they didn't cause COVID-19, but they still need to eat, they still need to pay their bills and electricity and stuff like that, gas, utilities. So what governments around the world did, including the US, they had to do what I would call a bailout, which is to print money without the value being attached to it. So, for example, in essence, they created money out of thin air, if you want to put it that way. They printed money from the money printer, which causes debt in the economy. And they gave that money out to support the economy from crashing and to help people to maintain their lives whilst COVID-19, gets dealt with by health officials and etc. So as a result of all of that money printing coming into the economy, two major things happen. The first one is that the currency of any country where they print currency without the value being attached will cause a devaluation, because the more supply of a currency there is, or the less scarce it is, the less valuable it is. Okay, the more abundant there is of a currency, the more weaker, or the weaker the currency gets in strength. Okay, the second thing, which is leaning on the first thing, is inflation. So as a result of the inflating of money, or the increase of money, it causes inflation, which means that the cost of living would go up. So COVID-19, which was a time where we had, for example, in the UK, the furlough. In the US, they had the stimulus package, or the stimmy, as everyone was calling it. All of those things were money that came from, or currency that came from, the money printers of central banks. Okay, it didn't come from necessarily value or commerce, because there wasn't abilities for people to do such things. Okay, there were some industries, of course, that were open regardless of things like hospitals, where they will still cause contact, but you understand, of course, why. But as a result of all of these things, the melange of different activities that happened during COVID, including stuff like very low interest rates, which encouraged a high amount of borrowing, especially from the richer parts of the world, and people with large net worths who could borrow a large amount of money. There was a lot more money in circulation to the broad public. Now, during 2008, we had the financial crash also, because 2020 was one also. But the difference is that in 2008, when the bailouts were happening because of the subprime mortgage crash, the money was given to institutions, but not the public. Whoever lost their job from example, from the Lehman Brothers, they didn't get bailouts. They just lost their job, they lost their home, and they just had to build themselves back up. So if you speak to people who've been through 2008 and 2022, their results are completely different. In 2022, many millionaires were made in the public, but in 2008, many millionaires became completely broke, minus even. Because the bailout money, or the money that comes from the money printer, that saving grace money, only went to institutions. So, banks, mortgage providers, and etc., but not to the public. In this case, COVID was very 19. It was very 19 because it was COVID-19, but it was very different because we had a lot of money going to the lay person. So someone who, a mom who has 2 kids who needs to pay her rent and pay the bills, was receiving her furlough in the UK so that she can support herself. Now, that money wasn't coming from value being created in exchange for currency, or with other world currencies and etc. It came directly from the money printer, okay, which put debt into the society. So now that we have the cost of living crisis, the way you can see this is, in a sense, the public is paying back what was taken without them knowing where it came from. Okay, so all of the inflation of cost of goods and services, which we call the cost of living right now, was always going to happen from 2020. And if you're a wise person, then during 2020, 2021, you would have made sure you did whatever you can to take advantage of that opportunity. So in times like these, you could profit even more, which is what many rich people especially have done. So why am I looking at the dollar index? Well, to curb inflation, the same way you broaden the money supply, you have to reduce the money supply, which is called quantitative tapering, or QT for short. So with the dollar index being the world reserve currency of the world, and the most major currency of the world also, it has the most currency pairs, or Forex currency pairs, attached to it in the world. I believe 208 to be exact. So with that being said, quantitative tapering is where the amount of circulation of currency, notes, coins are reduced purposefully to reduce inflation. Because really what inflation is right now is that the reason why the cost of goods and services have gone up, inflation has gone up, is because supply for goods is low because of stuff like the Ukraine war. But then there's also the other side where, because of the amount of money that's come into circulation, the base cost of things nominally cost more, not in terms of purchasing power, which I'll do another video on, but in terms of nominal. So if you, for me, for example, in the UK, for those of you who are watching from the UK, you know things like Lidl's. If you go, my favorite bread, which is the baguette bread, I believe it was the long one was 69p and now it's 99p within the space of a year, which I mean is not that major, but in terms of percentage, that is a 50p or 50% increase in the price. So that is, when you think of it in percentage terms, and then the base cost of everything else, then you realize that, okay, inflation is really something that is happening. Now, with the dollar burning all of these notes, which is what they are doing and they're planning to do, if we merge this with technicals, then where the price is right now is giving us an extreme entry for what I would call a massive incoming amount of bullish strength, which is artificial in nature and will die down in the years to come. But for right now, in order for the dollar to save itself, this is exactly what it's going to do: aggressive quantitative tapering. Okay. Now, if I merge the technicals to put this here, I'm going to go over here and start from here. So we've had a monthly supply zone. So why am I looking at this area where price used this from 2017 all the way until 2022 as an area of supply liquidity? So even when we get into 2020, those of you who have listened to this before, you would know what I'm saying, that even though the wick of the candle closed outside of this area, we didn't have a body close, which means that the price was still within supply, and we see another massive short that the price has done. Now, the trigger for where I knew inflation was going to start to take off and become a problem was right here. When the price took the low of the previous year, which was 2021's low, took the low of 2022, had a break of market structure return here. This was the beginning of a massive movement, which is not done yet. Now, the price in 2022, in April, and the timing doesn't surprise me that is in April, May that this has happened. Exactly the month of April, we had a break above this area. The body of the candle broke above here, returned to the other side. And now the price has pushed all the way up to 114 at the moment. Okay, so why am I ranting and raving about this? Now the price reversed, okay? And if we look to the left of this chart, there isn't anything, there's no supply zone on the left that could have caused the price to move. So I want to really put the detail here so you can understand why I'm so big on this long, even though it looks from this angle, it looks unlikely. Now we have a demand zone here. Okay, that is the price is broken beneath it and returned to the other side. So that can provide supply liquidity, don't get me wrong. But the actual supply zone, which is this area up here, and I'm going to make this violet so that you can see it. This area up here, price hasn't returned here before producing a short. Secondly, there's no interaction between these highs. There's no inductions that triggered the price to go short. The price just pulled back short very, very quickly, which lets me know that this is what I would call a natural reversal. Okay, this is a pullback before a massive move. Second thing to note is this demand zone area over here. Now, at the moment, we're on a monthly time frame. So the price right now is within two ranges of very strong demand liquidity. Okay, we had the first move, price broke market structure and return. Now we've come back to this lower area and it's taken the low of this previous trigger, which is exciting to me and something I was looking for. Now the price may take off from here and go long, or the price can close, the body of the candle can close in here and go long. But why am I so big on this? Well, quantitative tapering means that the dollar is going to gain strength massively. And when that happens, through quantitative tapering, the dollar would be pushing long, or the dollar index will be pushing long. Now, if you've never used or heard of the dollar index even, and you're not even a trader and you're watching this, now I want to put something here to say that even if you're not a trader, it's important for you to understand the basics of technical analysis and fundamental analysis. Why? Because it affects your daily life. You know, simple things like knowing prices of oil and gas, where most likely they're heading next without listening to the news, because by the time you listen to the news, it's too late. But just having basic analysis can help you to save even on bills. Just for example, knowing down here, for example, inflation is going to be a problem. So I'm going to spend more money on, saving, or make sure I save a lot. And then when the price gets here, I'm going to be able to spend it and be comfortable. And the cost of living crisis won't affect me. Things like that. That's how simple it gets. But for a technical point of view, for those of us who are traders as well, the dollar index having this massive bullish upswing, which I expect to happen, would mean that for dollar-based pairs specifically, so major pairs, that is which I usually trade anyway, the main major pairs are going to have some massive movements for the next couple of months and possibly years in terms of intraday, intra-month swings, and possibly intra-year, okay? Now, it won't last forever, but looking at USD CHF, which is what I'm going to do next, you'll see why I'm saying what I'm saying. So if we line up everything now, and USD CHF has been an exciting one, I'm going to start off with the week here. Now, first of all, the USD CHF analysis that I'm talking about, and I've been talking about, the price has come to the extreme bottom here and has already started to take off for a long. Now, I gave my WGA students an entry, which they should all be in right now, which it's a little bit hard to see from here. So what I'll do, let me just take this off. If I get up another USD CHF, the area of entry I gave is at this point here, just before the 1:30 retail sales news. And the price has already started to push along. Now, it's a Friday, but some of the best entries that produce swings for a very long time do happen on Friday. And I do think it's purposeful to some regards, but I do think that we have some great entries on our hands. And I will look at quite a few pairs today because I really want to give you a strong game plan. So I will spend my time with you guys today to make sure I do this. So looking at USD CHF from the monthly, I'm going to clear all of the charts quickly. Control B, Control A, delete all of that. Now, why am I saying that the dollar should give us a long? Okay, I'm going to use USD CHF as an example, and I'll be bouncing back between the dollar index and USD CHF before I move on to the other pairs, the highest probability pairs for trading. So I'll bring up the dollar index chart here, and I'm just going to do a few things. Now, first things first is, before I continue with the analysis for USD CHF, I want you guys to see the correlation. So with the dollar index, again, for those of you who've never heard of the dollar index before, okay, the dollar index is an index that lets us know the strength of the dollar compared to major currencies. Now, to be more specific, the dollar index is weighted against about 6 or 7 different currencies in what we call a weighted mean average. And they all have their different percentages. So the pound is there, we have the euro, we have the Swedish krona, okay, we have the Japanese yen, okay, and others. Now, I have a book that I've written that if you follow the link below, you can download it, okay? If you follow the link funnel in the description, you'll be able to get that book for sure, which gives you a deeper description about the things I'm saying. But nonetheless, when the dollar index is going long, any pair that's the US dollar being the base currency and the other currency being the quote currency will lose strength against the dollar and the price will push along. And I will definitely write this out, but I just want to show you something here. So I'm going to go over to the year of when the beginning of, if you want to call it, the cost of living crisis was going to start. So if you notice, in 2021 January, to the left, the dollar index, we had this movement here where the price took the previous low, it broke market structure, returned back to the area of demand it came from, and then shot up for a long. Now, if I go over to the same thing with USD CHF, okay, and we pair them side by side, you can see, again, the same thing happened. In the month of January 2021, the price took the low of the previous year, okay? And then if I drag this up here, we had a break of market structure like so. And now the price has come back down to this area of demand, which is the ultimate place for the price to produce a long. And now we're going long. So this movement here is exactly what we're looking for when it comes to the price action that I've been raving and ranting about. Now, of course, the dollar index hasn't come all the way back down to where it started from in 2021 because it's not the same as a Forex pair in that sense. And also is weighted against other currencies, whereas USD CHF is just the dollar and the Swiss franc. So the entry point, which I'm talking about for the dollar index, is the exact entry point because now prices come back here. This is the demand liquidity that produced the move. So we're in the highest probability area for a buy right now. And this is why I'm saying on a Friday afternoon, instead of on a Wednesday, that this is the entry that I've been looking for. Okay. And if it doesn't work out, which I'm used to taking losses, I wouldn't mind. But this trade is probably one of the highest probability trades in a historical trade, if the price does exactly what we're looking for. Okay. And to me, the prices are lining up absolutely perfectly. On the left, we have the price exactly inside of the area of liquidity we're looking for a long continuation here. And right on the right-hand side, we have the dollar USD CHF pushing exactly where we need to for an extreme long. All right. So now that I've got that out of the way, let's look at the dollar USD CHF and then the dollar index and back and forth. Now, overall, the overall theme of the price for USD CHF is that it is bearish. Now, there is a point to that. One side is that the dollar itself is a dying currency, and it sounds like a contradiction to what I just said about going long. But, you know, if you understand the history of the Federal Reserve, how it came about from the Knickerbocker crisis in 1908 and what the Federal Reserve is, then you understand that the dollar in terms of purchasing power over the last 100 years has dropped exponentially. Okay. However, on this road to a dying currency, there is a need for the price to gain its strength before we have another drop. And this is exactly what I've been waiting for and looking for a very long time. Now, if you're a USD CHF trader or you're a trader in general, we've had this range of accumulation here since 2011, 2012, all the way until 2021. 2021 is the first time we actually had a very strong bullish trigger, which the price has actually pulled back to now, to the same demand area of liquidity. Now, the reason why the price was in a range for so long and it hasn't continued on this bearish trend just yet is because we have something important, which is called unfulfilled efficiency, which is the supply liquidity. If you look at the moves that we've had previously, so I'll just map the price here. So we have a supply zone up here. Maybe I just change this to another color just to make it make sense here. And then we have another supply zone area here. In this case, we have a demand flip zone. Let's take this up here, supply over here, and then supply over here. Now, supply and demand is the engine of price. The liquidity that causes the price to move comes from the supply and demand, which is economical more than just a trading term. You know, when there's a higher supply for a currency than there is demand for it, the currency value will drop because it's not in demand, it's scarce. Okay. And it's vice versa. It's just kind of like, you know, when certain trainers like Jordan's come out, a very rare time, because there's so few of them, the prices are skyrocket. They're so high. But if it was very easy to grab from any store, then it would be a normal price of a Jordan. You know, so this is the same thing when it comes to currency, the supply and demand. Now, one thing that does affect supply and demand of currencies is government bonds and the differentials and the yield rates that come from it. Okay, which it comes from interest rates. So when you're looking at a currency, you do have to have that in the back of your mind. But following with technical analysis, this is why supply and demand is the key to look at. So if we trace what's going on from 2003, we see we have a supply zone formed, price drops, and then we return back with the wick of the candle, we push short. Then the next area here, we have supply, price returns into this supply zone area here, and then we have a short. Then the price pulls back again, supply liquidity is formed all across here, and I didn't even add this part here, so I'm going to add this supply zone here. And you can see if supply liquidity continues through, and then we move forward. Coming into 2017, 2018, here's the supply zone that we're looking at. Price drops are down here. You can see that price returns to this supply area here, and we have a massive drop. Now, the massive drop, if you want to know the story behind this, this is the Swiss franc crash. Well, this Swiss franc crash is 2014, but this is another one that happened here where the Swiss franc gained a lot of strength. Okay, during 2011, this was after the last 2008 financial crash. The dollar became very weak and gold made a new all-time high during this time period. Okay, so you can see historical activity here, and you can also see technical activity here. But the foundation that I want you guys to see is that the supply liquidity, even though this is a very clear bearish trend, okay, the dollar is definitely getting weaker. The reason why the price has been in a range for so many years is because it hasn't returned to this supply area yet. The moment it does return to this supply area, we are going to have a very strong short. And this is why the strong long I'm talking about is kind of like the last real bullish strength on the dollar index for a very long time, if ever, to be fair. All right, now, if I was to add the structural foundation, which is ABCs, I'm going to put that here. This is the A swing, all right, and this is the B swing right here. All right, I'm going to put this here, the A, and this is the B. Now, in terms of the Fibonacci I use is an institutional type one. It's not the same retail levels, so it's slightly different. Now, what the price is doing right now is that it's in the equilibrium point of liquidity, which means that committing to the bearish side of the market for institutional money is not what they would want to do. It would be a buy. And once the price does that, I'm looking for the price to get to this 78.9 or 86 range here, which will be the C swing point. At that moment, we should be looking for a massive short. And at that point here, if I can put this in another way, this is the C point. This will be the end of the DXY. Okay, end of the DXY movement. So the end of the DXY long, to be more specific here. All right. So when that happens now, and the price action, is as it is here, when we get to the C swing, the DXY will be ending its move of, massive bullish movement. That will be the end of quantitative tapering. Now, you know what? The market, as I always say, it seems like a conspiracy theory because these things happen exactly as planned. And you'll notice that sooner or later, there'll be lots of bullish news on the dollar, which will cause the price to kind of push up for a long. Now, I expect it to take probably about a year or two to get here. It could happen in less time. Maybe the changing over from one president to another could be the final trigger. There could be a lot, okay? But the key here is that the reason why we've been in this range from 2013 till now, a 10-year range, is really because there is no supply liquidity yet to the degree that can push the price further. But we will get to that point one day. So now that you understand the reason why I'm looking at USD CHF, if I come back here to the weekly, then you realize why this specific entry is such a powerful, and even if you haven't caught the bottom of it right here, but just to be in anywhere near this right now, you've got in at a very, very good price. Now, again, if I look at the dollar index, even from the weekly, I'm going to switch back here for a minute. I'll take the dollar index here on the weekly. All right. During that September time when the price reversed on every pair, so let's put this out of the way. I'm going to put this here. So during this September period over here, where the price reversed without actually doing any sort of induction here, if I go over to USD CHF, I'll take the daily view. I'll use the daily view over here. You'll see that at that same time, October, November time, same kind of period, we had an area here where the price made a double top without taking any highs or doing any sort of movement, and then we had a massive push short. And then, if you notice, we have two different types of bearish trend lines that USD CHF has formed. We have what I would call a type A, which is when all the candles are bullish or bearish, depending on what direction we are. In this case, we're bearish, so all of the candles are the same direction. And then we have a type 2 trend, which is the more common trend, where the price has a direction to it. There is directionality, but the price action is a lot slower. There's a battle between the bulls and the bears, if you want to put it this way, which is more natural price action. This is what I'll call institutional sponsorship, and this is more natural price action. Okay, really, the price is finding its footing to get down to an area. Whenever the price does this, usually the market is trying to find this footing before doing a massive, run long, and we'll see that very soon. Okay, so with USD CHF, which is my first pair of choice, I think we have an amazing opportunity to capture along. Now, I've got lots of markings here. I'm going to delete some so that I can clear up the charts a bit because there's so many things going on. This is the old markings here. I'll keep this here so that you guys can see this. And I'll keep this one too. All right. But where we are in terms of price action, we're in a very extreme place of this was a great entry to go for a long, and we should be prepared. Now, I don't think all is lost yet, but I definitely do think that we have to make sure that we get in because the price is already pushing quite strongly long. Now, the 3 o'clock news has just happened as I'm recording this in UK time, which is the news concerning Michigan consumer sentiment, which is important. I'm sure it's probably a bullish result. It's supposed to be, it's still at 62, but it might have been a bit higher. I don't know yet, but we'll take a look anyway. All right. So again, why again are we looking at the dollar index? And I'm going to bring up the H1 area now. So do you guys remember when I gave out the shout, I said to you guys that we're getting very close. We had the CPI news for the US dollar happen on the 12th. So 2 days ago, and you can see here, it's left a liquidity gap at the beginning of the move, which will be filled. Now, the dollar index has done this induction I'm looking for, and there's also broken market structure here. Now, on Monday, what we may be lucky to have is that the price may actually pull back one more time like this into this demand zone area here. I don't expect it to go deeper than this demand zone here, because the level of induction that the price gave us from the 1:30 news, which was retail sales over here, I think is more than enough to really produce a move. Now, if the price comes back here, this is going to be a great entry to go for a long. But if you want to get in aggressively, for example, in USD CHF, you can feel free to, because the price has actually gone to the correct depths of price action that we're looking for. Okay. Now that we've got that out of the way, you're probably thinking, so what other pairs apart from USD CHF are you looking for? Well, I'm glad you asked, I'll tell you. So I'm going to start from here. Now, if you can remember from the last post I gave, the last video, Pound USD has been more of an interest to me as I've been looking at the price action. Wasn't interested in it that much before, I'll be honest. And because of fundamentals, there was quite a deviation away from what the price was trying to accomplish, or other major pairs are trying to accomplish, and what the dollar is trying to accomplish. But anyway, looking at the price when I zoomed out, I noticed that the price didn't actually return to supply last year, 2022, or in early 2023, before doing these first and second shorts here. And I'll probably zoom in a little bit so you can see this. So you can see price didn't actually return to this supply zone. And this supply zone is a very key and important one, because for those of you who know market history and what happened last year, the pound versus the US dollar made a new historical low around about 1.03. And it took the low of the previous, there was one more low close by, which was in 1985, and that was the actual all-time low, or previous all-time low. And with the news and everything that happened and the dollar index reversing in September, the pound made an all-time low, even lower than the first. So this supply zone is, if you want to call it that, the initiator of this move in terms of technical, not fundamentally. So the supply zone here was the cause of the liquidity that we had, and price used this zone, if you see here, from 2022 May all the way down until we got to here during September. Okay. Now, when the price pulled back up here, which was going to be an obvious recovery to happen, we had 2 attempts for price to return to supply, which didn't happen. And last week, for the first time since last year, May, the price returned to this supply zone. However, I still wasn't convinced. The reason I wasn't convinced is because even though the price returned here, I didn't see any reversal signature at all. Okay, so what I said to you guys this week for Pound USD, which seems to be happening really nicely, is that I'm expecting the price to take the high of this week. So if we delve deeper here, I already have the markings here for it. If I go to the H4, now we do have a body close above the high and a bit of an accumulation, but we have a strong push down on the bearish side, and we also have a break of market structure already taking place. So this movement here already is something that signifies a change in strength. The body of the candles here on the H1 have closed beneath the low of yesterday, which is the last 2 swing lows here. And when the price has done that, now we have a break of market structure. Now, I put out these markings to my academy students about 2 or 3 hours ago before the news, because I knew the price would get here. And now all we would need is the price to return here one more time. Now, I'm not banking on a deep return, because with these kind of entries, you have to understand institutional money is probably already in from the tops, and they want to make sure that they drive the price and kind of take the market away and make the most profit. So in order for them to do that, the moves have to be hard and fast. So now that the price has taken this high here, I mean, we could have taken a trade straight away, but the first thing we do need is a confirmation of a break in market structure, which we do have. But we also need that return to origin. This is why I'm saying that, look, following back with the dollar index, I do expect the dollar index to pull back one more time, maybe on Monday, and then we go for a long. But if you've managed to grab the aggressive entry now, that's not a problem either, okay? So the second pair I'm looking at is for pound USD. So game plan number 2 would be pound USD to give us one more long return, and then we go for a short. Now, at the end of this, I will look at the news to see what we have for news, but we actually are in, again, a very good point of where we can get our entries from. So game plan number 3, and I'm going to put these in order here. So I'm going to put this here. So we have the dollar index here. I put my daily charts out. I don't even think I need this. Daily dollar index here. We have a USD CHF. Now, again, I hope you guys understand with USD CHF where I'm going, why this long is so powerful and important. Is this historical? Please make sure that you watch this video over and over again. I wanted to make sure I gave you guys everything you need in as much detail as possible for you guys to have the best opportunity to really kill it out there. Now, I think I deleted the chart that I didn't want to delete, and I'm going to have to get it back. So open, deleted, get that USD CHF one back here. There you go. Can't lose that chart. So put these all together. All right, so we've got the dollar index so far. We have USD CHF. We have pound USD over here. All right, and I'm going to move on to the next one. So the next one I'm looking at is AUD USD. Now, I probably will go through all of the majors, and I will go through gold, but I want to go through AUD USD first. Now, AUD USD, the Australian dollar itself, has a very strong correlation with gold pricing because one of the major exports of, and one of the largest industries in Australia is mining. So you'll find that the sensitivity towards gold price is a lot higher with the Australian dollar. Okay, now it's already kicking off as expected with AUD USD, but I think AUD USD is pretty simple what we're looking for. Now, we've been looking at AUD USD. I've been posting out analysis and things about AUD USD. We have a massive short that is coming very soon. And NZD USD is even more interesting. Now, the reason why NZD USD is more interesting, just to do a quick little background here, I'm going to put this here for you. If I go over to the monthly, talking about how fundamentals link with each other, if you look over here, there's a very strong unfulfilled efficiency here. When the market crashed, okay, in 2008, which is this massive bearish movement over here. I'm just going to put this right here. This massive bearish movement over here, when the price reversed into this long move here, the price didn't return to this demand zone at all. And I've always looked at this chart and known that one day there is going to be a massive dollar strengthening of some sort, or very strong weakening of the New Zealand dollar that is going to cause the price to come back to this 48 level. When the price gets here, this will be the launching pad for an extreme long, which is another reason why I believe the dollar is going to become so strong, because there's long-standing unfulfilled efficiencies from the last financial crash that haven't been dealt with. Now, 2020, there wasn't enough liquidity to get the price down here. But with everything going on with inflation, we have the perfect cocktail of fundamentals to cause the price to do something like this, which would be quantitative tapering on the dollar. So now that we've got this, NZD USD is another one. I'm not going to do a deeper analysis than this, but I expect the price to get to this 48. All right. So back to AUD USD anyway. So with AUD USD on the weekly here, if I drag this demand zone here, the price has broken structure here and given us a return to the other side of this demand zone. So this weekly demand zone is a supply zone. Now, what I was looking for was an induction of the highs which we've had. And if I go to the H4, the news that happened at 1:30 and now the news at 3 o'clock, I think this red color, because of the bearish candles, looks a bit strange. So let me just change it off for a blue. All right, it's a bit better. It's hurting my eyes. I'm going to turn on the brightness on my screen. But yeah, so now that the price has taken a weekly high, you can see we have a strong induction here, which means that the algorithm of the market has a very strong interest in running bullish liquidity, which it's doing right now. And I guess on a Friday, I don't think that many people are expecting a move like this. But for those of us who have been patient and waiting, this is what we want. So now with AUD USD, I'm going to give you an entry already. Price has taken the high of the previous day with a brilliant induction. we have a break of market structure now. We didn't have that before. When I was watching the price action of AUD/USD, I knew the price wasn't ready because on the lower time frames, on the 1 minute, there's algorithmic price features there that let me know price is not ready to go for a short just yet. And I forgot about the news actually until seeing it now. With this 15-minute candle that's come from the 3 o'clock news, what we need now, because here the swing low hasn't been closed beneath yet. The body of the candles come to the edge of it, but we don't have a body closed beneath these swing lows. And the algorithm of the market is respecting this swing low as a swing low. So we've got 5 minutes left because it's 10 past or 11 past 3 now. In the next 4 minutes, if the body of this candle closes beneath this swing low here, we officially have a break of market structure. And that gives us room to say that we can go for a long. Now, a more obvious thing to see is that we do have a liquidity gap here, which was caused by the CPI news that hasn't been filled. So it's an obvious short. Okay, so all we need price to do now is to pull back here and then render this short for us. And from this short rendering here, it's going to give us the move that we're looking for. So this move right here would be what we're looking for. And then we can go for a short. So I'm going to wait and see. Now, this is a very simple trade and a very easy trade. Now, it could actually happen today or on, I wouldn't say Sunday night, but Sunday night for us, UK time is 10 o'clock is when the market opens. But I wouldn't get in exactly at market open. But I think the London session in the morning, even though it's outside of AUD/USD's liquidity time, I wouldn't be surprised if the price starts to head back to this area, or as soon as we hit the US session, straight in. Okay, so I'm watching this to see what the market is going to do, but this is my third trade that I'm looking at. All right, in terms of price action. So I'm going to put AUD/USD here to the left. Now with gold. Now gold, I've put out a lot of markings. I do have markings on my other chart that I may be able to do, but for the sake of this analysis, I'll just keep it as it is. So already gold has been in a very interesting position, and you've always seen me mark out these lows. This is my expectation for gold. Now, in the long term, gold is definitely always going to increase in price. And you can see that we've had a very massive bullish run in the first cycle from 2001 onwards, okay? And after the high of 2008 was made, the key thing to note is that we have body closes above this high. So 2008 to 11, when we had a new all-time high for gold, which was about 19, from my memory, is 1920.21, something like that. But we've had body closes above this swing high, which means we are going to have a continuation long. However, structurally speaking, there is reasons for the price to go short. And my target is actually down here, which sounds crazy, but I do expect the dollar strengthening to cause a devaluation of gold. Now, one of the things which is, if you want to call it financial warfare, is because investors hedge their money in gold and now Bitcoin to hedge against this inflation and the dying dollar instead of holding onto currency. One of the ways to discourage investors is to cause the price of commodities, especially something like oil, I would say gold, not as much oil, but gold and silver, to be depreciated in value or depressed in value by the dollar, and other central banks as well who play this game. And the reason is because they want to discourage investors away from holding onto gold and give them a loss, which would cause them to want to shift their assets from, or their holdings from gold back into the dollar, because that will increase the demand. So that's the game they play there, which is why one of the reasons why I expect a short to happen. So bearing that in mind with that context, from a structural point of view, there needs to be a pullback anyway for gold to be able to launch off for the next long, which I expect it to come down to this area here. From a technical standpoint, in 2022, we had an induction of the previous yearly high. The price was so close to the 2020 high, but just missed it. And I expect the price possibly to even reach there or just go short from where it is now. Because to be fair, officially, this induction is not invalid until the price closes above here, which it hasn't done. Okay, so we still have room where gold can actually just push short from where it is, and it wouldn't make sense until I go to the lower time frames, which I'm going to do right now. So if I pull up another gold chart over here, and we'll go to the D1, I'll show you what we're looking at here. So on the daily time frame, the supply zone that we're operating in from a daily standpoint is right over here. and the price really is at the edge of it. If you can remember, I probably said this on the group, or I said this in the video, that there's a very obvious liquidity gap on almost every single Forex broker chart. There's a gap at around 1868. Some charts say 1865, but there's a gap 1,450 pips away, approximately, that the price hasn't filled. And in light of what I've just said to you, there's a very strong reason for gold to go short, which will come from this massive bullish dollar strength that will come into the market. Now, if I go over to the weekly here, also these lows here, just like how the dollar index didn't take any of the highs, none of the lows were taken to trigger this move. And now the price has gone long from this area here. My expectations with gold, if I go over to the weekly, is I'm hoping that the price will just give us a weekly induction like this, which is good enough for a short, because at the end of the day, the price is still within supply range. The 2022 move and then the 2020 candle over here, this whole area here is supply. So the price is still okay to go short from this area. If the body of the candle stays in here on the weekly, there's no problems with it whatsoever. On the daily time frame, the price action here, as we talked about, there's a very strong buy order aggregate here. This is a near perfect trend line, which is algorithmically formed. And this is simply to be able to trap bullish liquidity long and to entice people to continue buying. And anytime you see this, know that a very strong short is coming soon after. And this is what my expectations is with gold. Now, in the H4 time frame at the moment, price is pushing short, but on the H1 and H4, the price action is not clear enough. We're gonna have to wait probably another day, which will be basically till Monday, for the price to give us the information that we're looking for. And so this is my top 4 pairs that we're looking at. So recapping very quickly, we have USD CHF, which is pushing, is just shredding for a long right now. Okay, we have pound USD for a short. Okay, when the price returns here, we have AUD USD, which now the 15-minute candle has closed. We have a market structure break. I'm looking for a pullback here and a short. And also for gold, we are looking for a short. The only difference with gold would be that if we do take this short, we're going to have to use a skill called reoptimization of zone entries. Now, I'm not going to go through that now because I want to keep the video kind of short and sweet as much as possible, because I know I've said a lot. But I will be giving out entry for gold on Monday for reoptimization, which there is a couple of it, but we're still going to have to wait one more day. Okay. Well, we're getting to the position that I'll be waiting for a very long time. And I hope that you've had an informative, fundamental, and technical view. Now, we're not done yet because we need to go through the fundamentals of the news. This is the game plan, so we need to look into what's going to happen next week. So what I'm going to do, I'm going to pull this up here. Let's go over to FX Street, which is my favorite. Now, I told you don't have to use FX Street. You can use Daily FX, which is more animated. FX Street for me is like a kind of good balance between straight just writing and then the animated part to kind of help the news digest a bit better. Okay. And then the other side of the story is we have Forex Factory. If you just want straight news, I don't want to see any graphics, just tell me the news and let me go. You can go for Forex Factory as well. Okay. Now, because of where we are right now, the next 2 weeks are going to be important, and we need to check to see what news can give us triggers towards where we're looking for technically. Now, remember, fundamental news in Forex, as I've said, is always lagging behind technicals. Price is the best indicator ever. It's the best news teller ever. You can see history from it. You can see, you know, what the next meeting that they're going to have is going to be about. You can even tell what a speech is going to be about and if it's going to be bullish or bearish, looking at technicals. But fundamentals, especially high impact news, gives us timings for where triggers that we're looking for certain entries can happen. Okay. And one of my friends in the institutions told me that they don't trade news. They usually use news to get out of positions or entice other people, market participants, into it so that they can have exit liquidity. So next week we have, and I'm going to focus primarily on the dollar and the pound. We have high impact news at 7 in the morning, which is the claimant count change on Tuesday. And let's see what else we have here. Okay. On Wednesday here, We don't have any high impact news on the dollar. We have New Zealand dollars consumer sentiment. Okay, moving on to Friday. So the main piece of news next week is probably pound news and a few Australian pieces of news, but nothing special yet. So let's go to the next week after. So let's go to, I'm going to have to do the next week. So I'm going to go from 23rd. So 23rd to the 30th. Yeah, 23rd to the 30th. If I apply, let's see what we have. So Monday, nothing. Tuesday, nothing. Wednesday, nothing important either for the dollar. Okay, Thursday. Okay. So no high impact news for the dollar for the next 2 weeks. Very interesting to see. Is the GDP here? No. Now, whenever it happens like this, I guess into May is when we're going to have high impact news. But what does that mean? Well, if there's no high impact technical news for the dollar for the next 2 weeks, it means that the technical price action for the entries will start off a bit more slowly, probably. And when the news comes out, the news will augment the direction we're already going in. So that means we're going to have to be subtle. Now, it's interesting that there's not going to be that as high volatility around very key entries that we've been looking for. And as I said, if that happens, it means that the entries are coming in by stealth. Especially, look, for example, everybody expects entries for reversals to come in on Wednesday and Thursday or Tuesday, not really on Friday in the afternoon. But yet the price has done that initial trigger, which lets you know that this week we're going to have to be very stealthy with our entries. And then when, you know, we get into May, so if I go for next month now, I think probably the first piece of news will be on Wednesday. We'll have the interest rate decision probably for the US, plus we're probably going to have the non-farm payrolls. Let's see. So if I go into May, let's go over to Wednesday. Yeah, here we go. So the Federal Reserve interest rate decision is on the 3rd of May. Okay. And then on Friday, let's see, do we have the NFP news? Yep, we have the NFPs in the same week. So we have about 2 weeks of range for us to get our entries probably next week. Keep on holding on to them, and then into May is when we're going to really see those massive moves that we're waiting for. We will probably have some before that, but into May is when we have those massive moves. So that's it, folks. I hope you guys enjoyed this video. Make sure you subscribe, share, like, share with whoever, leave some comments, and join our Discord group so that I can share, because these breakdowns, I always write them out and give them to you so you can have something to work with. All right, and enjoy the rest of your day, guys, and I'll see you in the next episode. Take care.